Alright, well, sorry I've been gone. I'm gonna make a new video. I accidentally just deleted my CBS and CB videos, so I'm going to remake them. Okay. Okay, so a CBP is a complete buy program, CSP is a complete sell program. Um, this is just basically like a price action concept, and I can break down this last week or so here because in my next video that I upload, I have breaking down this week's price action. So there's only two ways to actually complete a buy program or complete a sell program. One of the two ways is respecting the 0.5 to 0.75 range, or taking out liquidity on the up or downside. So we could see something like this. So the only way to fall down here is by taking out this internal liquidity, or respecting the 0.5 to 0.75 range or 0.25 range. It's the same thing, right? They're just fractions of numbers. Here's the settings in case you want these. Okay, and then if we break this 2.5 range, we're going to come for the 0 and then continue that. So, for example, I'll break down, I'll just do a little bit of like hindsight kind of thing here. So we're only really trading the AM session, right? So this is how you can kind of use it for buys. Well, you can anchor it from session highs and lows or liquidity highs and lows. So here, in engineered liquidity or lying liquidity inside of these areas are just really nice. So here we have this liquidity, right? Pretty low resistance liquidity that we just kept on taking out overnight. Kind of channeling, you can say. And then we have this range here. This one's not as good of an example just because it was more on like the liquidity side, but in general, if we're going to start selling off, we are going to respect the 0.5 to 0.25 range. We should be respecting this range in order to go lower. So when we see this on AM, right, I can mark out the New York AM actual candle. It's going to be around here somewhere. It's not actually up here. So we saw this taking out this liquidity, and then in order to fall lower, we must respect this liquidity that we came to. So there's where we're going to get our complete buy and sell program. Because this high that was put in here pre-market was used in order to be respected to fall in the markets, and is why I actually placed a short here, I believe. Yeah, into this candle. So broke this, all in the same candle, and my entry was right there, I believe, for this day. Looks something like this, right? I like to look at the 5-minute or 15-minute whenever I'm doing buy and sell programs, just to let you guys know. Okay. Now for this day, I can mark out the 930 candle again. This one's beautiful again, right? Like I said, one of two ways. The way here is by taking out previous day high. Previous day high is always going to be a complete of a program. So overnight, we didn't really put in anything special. Then here we came to take out this buy program again. In order to enter into a sell program. Then once we complete this sell program, by respecting this range, wrong tool, but I can still kind of mark it out. respect to this. Now to complete this sell program, we must come back in here. I know I'm saying it a lot, but this is just how it goes, right? If we're going to continue bearish, we're either going to respect this range or sweep the liquidity and then go bearish again. And this would be like a nice trade that I would take here because we broke all this. Now we're going to respect this here. Then continue lower. Okay. On the flip side, you don't really want to be bullish here because this bullish trend has ended by taking out previous day high. Now we need to respect bearishness in order to confirm bearishness. Okay. Tuesday, and then we'll go over Monday. Okay. We leave an imbalanced range here, which usually means that we need to retest the 0.5, which looks like we did not here, which is fine. This just means that in order to pull up bullish to take out previous day high to complete this program here, we have to come sweep liquidity. So we take out, these lows. There's nothing for us down here except probably a very high time frame, gap of some sort. Yep. Very big gap. And where's liquidity line? Or where our previous buyer's going to want to buy in. Well, this wick, really. But you can say like this whole area. There's going to be a lot of liquidity in this area in general. So market opens up here. There's not really anything to send us higher right away. So we come and take out this orange line, which is liquidity. Give us a little fake pump. I actually took this here. Got break evened, I believe. No, I took a loss here. I took a loss on this, yes. And then we came up. Yeah, remember this is really clean. Because then we took this, retested, and then pumped up all the way to previous day high. My target was literally right here on that blue line there. Okay. Mainly this is going to be used for bias, but you can just use it to understand price action a little bit better. Okay, London, Asia, puts in. We're looking at the markets right around here. If we're going to continue bearish, we're going to respect this range, which we did not pre-market. Very close, but we did not. But then, in order to enter into a buy program, completing our sell program, we must take this liquidity. And what did we do? Took the liquidity right at 9:30, pumped up. I got my entry. I'm trying to think of what I took this day. Yeah, right here. This break, boom. Enter on this wick. A lot of liquidity there. Boom. All it is context and confirmation. That's all you really need. Context, we took out the liquidity at the bottom. Confirmation. Okay. Then what do we do to continue higher? Respect order flow. And then right there. Wait for the retrace there. Should be protected here. You might get stopped out, but then you can get a re-entry around here. Continuation. Okay. So hopefully that makes sense. I go more in depth into it. If you guys want me to. But essentially, that's it. It should be a fairly simple concept. It's very more intuition based, I'd say. It's not just something, very simple, but a little more of an advanced concept, I'd say, for the most part. But yeah, that's how you can understand your price action, understand bias for the day, right? If I take, for example, this day, we're kind of not really looking at anything here, buys or sells. So this might be a day that I might just lock off the market. And as you can see, we got pretty choppy price action to the upside. I mean, unless you got your entry on that 9:30 candle here, you're just pretty much chop, which I don't really like, but I did peep something here on the 15, right? You guys see this like shape here? Boom. And then this fish finishes our top. And then as soon as we take out that top, that's when we'd get a confirmation and respect and a flip. Okay? Engineered liquidity right here. So hopefully that gives some insight into what I like to look for in complete buy and sell programs. I created it, I guess, myself, but I'm sure there's other people that look into this kind of stuff, and you can say it's very, maybe more ICT based. It's really up to you and how you think of it, but I just hope it can help some people out. It's worked really well for me. So, yeah, hopefully you guys enjoyed.